Hello and welcome to Startup Street. I'm Arundhati Ramnin and I've got both Shruti Mishra and Ritu Singh with me. But these are the top headlines that we're tracking for you this evening. Content-to-commerce conglomerate The Good Glamm Group acquires 51% stake in Tweak, a women-focused platform founded by Twinkle Khanna. The Bollywood actor now joins The Good Glamm Group as a shareholder.
Rene Cosmetics backs $25 million in a Series B funding round led by Evolvance India with participation from Edelweiss Group and existing investor Equanimity and 9 other unicorns. Now, this is the second funding round for the D2C startup in 2022.
Biryani by Kilo acquires dessert brand Getaway with a fund infusion of $2 million. The startup, which appeared in season 1 of Shark Tank India, will now enjoy sales through Biryani by Kilo's 100-plus cloud kitchens.
IT giant TCS is reportedly launching an app to tackle mental health issues. This marks the first time that the Tata Group company is building a product for general users. The company is in talks with hospitals and companies for the rollout.
Pinterest joins the growing list of social media companies to lay off their workforce. The number of employees let go remains unknown but is expected to be lower than its rivals Snap and Meta, as per a report by The Information.
Elon Musk's Neuralink faces federal probe and employee backlash after the company, which is making brain implants for humans, is said to have caused the death of 1,500 animals in experiments since 2018, as per a Reuters report.
Well, those are the headlines we are tracking for you this evening. Moving on, content-to-commerce conglomerate The Good Glamm Group has acquired a 51% majority stake in digital media company Tweak India in a cash and stock deal. Tweak India, founded by Twinkle Khanna, will join the Good Media Co. portfolio of companies. This acquisition will further enhance Good Glamm Group's content creator commerce strategy via Tweak's content, which engages Tier 1 demographic. To talk to us about the acquisition and the road ahead, joining me now are the co-founder of the Good Glamm Group, Priyanka Gill, and author, entrepreneur, columnist, and film producer, Twinkle Khanna. Priyanka and Twinkle, welcome to Startup Street. And Twinkle, let me start with you. You founded Tweak in 2019. What made you sell a majority stake to the Good Glamm Group? What synergies do you see between Tweak and them? And most importantly, how do you see your audience engaging with the Good Glamm Group's many content platforms?
When I first started Tweak, actually, we had offers for acquisition right at the start. But I wanted to build Tweak to a certain scalable strength, which is what we have done at this point. And now beyond this, if I want to take the next exponential leap, then I would have to depend on a very strong partner to give me back-end support, technical support, to build out our video verticals. And when I looked at the Good Glamm Group and I saw what they'd done with the companies under their conglomerate, I felt that this was really a complete synergy in terms of what they were looking for and what I was looking for. I wear a lot of hats like you have just described, and I try and pull a rabbit out of each one of them. But I think the Good Glamm Group has pulled a unicorn out of theirs, and I do want to learn this magic trick, let me tell you. So I think this was the perfect partnership for me.
All right, so let me go to your partner now, Priyanka. Tweak India now becomes a part of the Good Media Co. Also, Twinkle now joins as a shareholder. Take me through the specifics of the deal. We understand it's a cash and stock deal, but if you can give us some numbers. Also, I believe Tweak Books is also part of the deal.
As you know, we don't usually share specifics of the deal. We acquired 51% stake in Tweak India, and along with that, all other residuals that come from that, including Tweak Books. We are very excited to have Tweak and Twinkle on board, and that's what we're going to say about it right now.
Priyanka is not giving me any numbers, but Twinkle, coming back to you. Tweak India from the very beginning has been a collaborative space for women to engage and discover new ideas, collaborate and communicate on unconventional topics. While you continue to run Tweak independently post this deal, what changes now? You know, if you could give us a sense of what the Tweak of 2025 perhaps will look like.
I think the Tweak of 2025 will see growth in their video verticals. We'll see a deeper penetration into the Hindi market. I feel that we will be able to jump across multiple platforms in terms of OTT platforms or podcasts, or other avenues that come along, I feel that we will probably be larger, but still a tight group, and our content will stay true to the Tweak voice. We will continue engaging with women on relevant topics in a completely irreverent manner, and that will not change. I do see Tweak getting into multiple avenues of maybe content to commerce, and seeing multiple channels of revenue opening up for us.
All right, multiple channels of revenue opening. That's good news. Priyanka, coming back, you now have 5 platforms in the Good Media Co. You've got Pop Exco, Scoop Whoop, Baby Chakra, Miss Malini Entertainment, and Tweak now. What is the big play here? How do you plan to build on the group's D2C business as you engage with these communities?
Like you rightly said, we have 5 very large and vibrant platforms as part of our media portfolio within the Glamm Group. And each one of these platforms reaches a very specific audience segment. Pop Exco is for that young 18 to 25-year-old teen. Tweak, of course, is now for the 25 plus, more aspirational woman who lives in tier 1 cities. Scoop Up is for the Gen Z and millennial male audience. Baby Chakra reaches mom and parents very, very well. And Miss Malini is for the Bollywood audience, right? So we feel that through all our media platforms, we have access to a very wide variety of audiences. We reach 200 million monthly active users as the Glamm Group. And through all these users, we can show to them all the products that we have under our brands portfolio and strongly build out the content to a commerce funnel, right? So our audiences at the Good Media Co are the top of the funnel for us, and we want to take them down and convert them into consumers.
All right. Talking about the D2C space, Twinkle, over the last few months, we've seen that Tweak has added a shopping element to the platform. How has the response been so far? If you could share some numbers, and what kind of collaborations will we see in the future?
I'm quickly learning from Priyanka that we don't disclose numbers, so I'm going to repeat that line. Okay. But I feel that definitely our line of pajamas and our Tweak books for children specifically have done spectacularly well. I also feel that as we're going along, we are thinking of kind of expanding our Tweak book section, probably tying up, we're in talks to tie up with a publishing house as well as a retailer, and making it a platform also for a lot of upcoming and new writers where they would get a chance to get published. So we're looking at multiple opportunities like this. And yeah, that's where we're at.
All right. Talking about collaborations, Priyanka, what kind of growth numbers are you seeing at the Good Media Co? And of course, on the group level, what is the road to profitability looking like? Also, are you adequately funded right now?
We are absolutely adequately funded. Luckily, we raised our capital when the funding winter had not yet descended upon all of us. And thank God for that. So that's something that's a great source of strength for us right now. In terms of numbers, the Good Media Co itself is going to be profitable by the end of this financial year. And any further acquisitions and our running costs, etc., running costs will be funded through our own money that we are making right now. And of course, we'll keep looking at acquisitions as and when they come along. The numbers are looking good, strong. I think like all startups, we are focusing a lot on profitability and growing in a measured fashion that is respecting the environment that we're in right now. And extremely excited. And very soon you'll be hearing more news coming out of the Glamm Group.
Twinkle, let me again come to you. You're a woman, again, we spoke about this, who dons many hats. You're currently pursuing a master's in fiction writing. How is it going back to school, university, and how soon can your readers expect the next bestseller? You know, what are the plans as far as your next book goes?
Well, I think this has been, pursuing my master's has been one of the most fulfilling experiences of my life. When I'm walking, and I've made a bunch of friends in my class who are from different age groups. I think the oldest is 65, the youngest is 23. And I don't really feel particularly old unless I'm walking down the steps with them, because then my knees sometimes hurt and theirs don't. Having said that, I did go and buy, a supplement of cognitive medicine so that I can compete with the 23-year-olds. I hopefully don't need it. And yeah, I've been writing. So I think end of 23 is when my next book will be out.
Okay.
Yeah, that's the plan.
All right. Now, before I let you go, Twinkle, I'm going to ask you 3 rapid-fire questions, quickly. And the first one is, tell me top 3 topics that women engage most on Tweak.
Relationships, sex,
Okay.
finance.
Producing a film or writing a book, what challenges you more?
I don't think it's about challenging. Producing, unless you're a line producer, that's extremely challenging. And luckily, I've not done that part. Writing a book, I think, is slightly more, I would say, you can go at your own pace, and it's a solo pursuit. So you don't have to interact with too many people. And I think that is my idea of heaven, not interacting with too many people.
All right, one final question, and I want you to wear your columnist hat and tell us, what does Mrs. Funny Bones think of Elon Musk's takeover of Twitter?
I used to love Twitter. In the beginning, it was a great platform to engage with people. And I feel it became very toxic. There is a Hindi saying, Loha lohe ko kaatta hai, but I think instead of iron, what would get rid of Loha is rust. So I think Elon Musk is doing the bit of rust quite successfully right now. And let's see what the outcome is.
All right. On that note, it's time for us to wrap up this conversation. Wish you the very best with this new partnership. Priyanka, we'll of course keep track of the Good Glamm Group. Twinkle, many thanks for joining us on Startup Street. And it was an absolute pleasure talking to you.
Thank you so much for having me.
Thank you, Priyanka.
Thank you.
All right, from Good Glamm here to the FinTech Street, where FinTech platform KreditBee has raised $80 million in Series D funding from its existing investors, Premji Invest, Motilal Oswal Alternatives, TPG-backed Newquest Capital Partners, and Mirae Asset Ventures. The round also saw participation from a new investor, that is the MUFG Bank. Now, the company is going to use these funds to diversify its product portfolio and strengthen its tech stack. Now, KreditBee, remember, had raised about $75 million in Series C funding last year, with its total cumulative fundraise of over $280 million to date, including this new $80 million funding. So joining me now is Madhusudan Ikambaram, who is the co-founder and CEO of KreditBee, to talk about this funding and a whole lot more. Madhu, thanks for joining us here. And my colleague Arundhati also joins in from the Mumbai studio. Madhu, we'll start by asking you about this $80 million fundraise. In this Series D round, are you looking to raise more before you close it? And how exactly are you going to be using the proceeds that you raised from this?
Hey, thanks. Thanks for inviting me for this. And yes, this is an ongoing round. What we have seen is there has been an increased interest from the investors to further participate in this fundraise. And therefore, we have kept this round open. So the interesting thing about this round for us was the entire global economy is kind of looking quite gloomy, which is making the fundraise quite difficult for the startup ecosystem. However, I do believe that the fundamentally strong businesses would continue to raise fund. And in our case, this phenomenon was quite evident. Not just our existing folks, but MUFG, which is Mitsubishi Bank, which is one of the largest world's bank, is also kind of seen our model being kind of scaled up quite sustainably and with a lot of discipline, and therefore the bank also came in as one of our investors. While having said that, yes, we are using this fund to kind of increase our product portfolio. Definitely, so we being a lending company, there is a certain the debt leverage, equity to debt leverages has to be maintained in a healthy equation. So therefore, the equity infusion will further strengthen us to kind of increase our the entire AUM and whatnot. And we are definitely looking to kind of add much more products to our product portfolio, what we are offering to our customers today.
All right. Hi, Madhu. Arundhati here. So like you said, you're going to use these proceeds to add more products to what you already have. You've said that you plan to venture into home loans, secured loans and insurance. So are you looking at any tie-ups for insurance? And home loan has established peers and is a hugely competitive space. So what plans do you have here? What would your book look like? And in secured loans, what would you target at this point?
Sure. So let me correct that a little bit as well when I'm talking. So see, we are looking to offer multiple more products to our customers. Our entire product strategy is built over customer needs. Today we see an increased demand from self-employed and SME proprietors requesting for working capital loans. So therefore, our immediate step would be to cater to such needs of our customers. So our focus is definitely on the SME or the micro SME side of working capital loans, and not specifically on the home loans, I would say, as of today. And what we also see is that there is a significant demand for two-wheeler loans on our from our customer side. So we shall be designing a new product to cater such needs. So yeah, I think the current challenge is for us is to that we need to build teams to launch these products, and we have kept our options open in terms of how we build the teams. And these are the products what we would be kind of looking at in terms of adding to our portfolio. And a home loan is still a far-off story, and similar is with the insurance at this stage.
Well, Madhu, I'm just reading out from your press release, which said that the company plans to, offer more products venturing into these digitally enabled secured loans, home loans and credit lines, and then expand by introducing financial services like insurance. But like you clarified, that is a long-term plan. So that is just a clarification for everybody else like us who has read your press release and thinks you're venturing into that space. But, Madhu, there's been a sense that with the recent regulatory changes for fintechs, there will be a bit more consolidation in the industry, especially for players that do not have the NBFC license. Of course, you have one for yourself, but are there inorganic opportunities in the market that you're currently evaluating?
See, I think first to talk a little bit about the regulatory environment, I think it's kind of evolving, especially with respect to digital lending. Right. So the recent digital lending guidelines or the data protection bill are all designed to kind of bring a larger sanity to the industry. I think the most talked topic has been FLDG, right? So FLDG had definitely helped fintechs, largely the ones without a NBFC in the group structure, to grow unprecedentedly. And however, this was kind of building a huge systemic risk within these companies. Basically, these companies were getting over leveraged. That was the major issue with FLDG as one of the key component to kind of drive the growth. So therefore, RBI's move towards putting certain sanity to arrest such systemic risk is a welcome move. It does impact the growth within the industry when we look at it from a short-term view, but if you look at for a long-term perspective, I think these policies will definitely strengthen the entire industry to grow with a lot of sanity here and with a lot of stability. Now coming to what's our plans, we are not trying to kind of look at this as an opportunity, but definitely, as I said, that we are venturing into different products, which is SME lending and working capital loans for the SME and two-wheeler loans. So therefore, there is a need to kind of build that products. So we are keeping our options open in terms of either we acqui-hire or acquire a company which has been doing great job within this particular within these products. We would be looking for that. We have kept our options open, and yes, so if there is a right synergy we could find with any company, I think we're more than happy to kind of merge with them. Yeah.
All right. And Madhu, we're running out of time, so if you could quickly tell us, you're targeting to double your AUM over the next 6 to 9 months. So where is this growth going to come from?
I think basically, so any new product, whatever we would launch, will take a certain gestation period to kind of really scale up. So today, I think the primary product for us is we do personal loans for salaried and self-employed. I think that would basically the main product for the next year, and therefore that is the one which will fuel the growth towards our AUM, and that we are looking at almost kind of reaching a 1 billion AUM target within the next 6 months, which we are rightly kind of positioned with just our primary product itself. Adding the new products, it's not that they are going to turn around the equation in a month or 2 months time. So those are going to kind of bring value or add to the AUM only in the future in a long-term perspective.
All right, Madhu, we're completely out of time, but thank you so much for joining us on Startup Street today.
Thank you.
On that note, it is time for us to head into a short break. But coming up next, agri-tech startup Cropin secures pre-series D funding from 2 unnamed technology companies. A special conversation with the startup's founder and CEO on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Bengaluru-based agri-tech startup Cropin has secured pre-Series D funding from two unnamed tech companies that have made strategic investments in the startup. Speaking exclusively to Judh Sanith, Cropin's founder and CEO Krishna Kumar says that the company will close its next funding round of $50 to $70 million in 6 months. He added that the company's cloud-based scale-up plans allow it to make predictions for every farm on the planet in 3 years' time. Take a look.
This industry is going to be powered by knowledge graph, and knowledge graph, without knowledge graph on the crop, AI doesn't make sense. It will not bring the context out. We are in 92 countries today. We manage around 500 different crops, 10,000 varieties of those crops. So we have data from every possible, continent, different geographies or climatic conditions.
So does this unified approach means that you can scale up business, and if yes, to what level?
So with this, all this data sets coming together will give you a power to build intelligence on every farm on the planet and scale that out, right? So if your models are learning from, let's say, potato in the farm, potato in India or certain varieties, but there are also farms of potato from Africa or different part of the world. There's a transfer learning happening. Now, the same model can be deployed for all potato across the globe now, and it will give you a consistent output, right? And that is all powered by the knowledge graph, because if you don't understand the crop and the variety and the location, how they interact and why they are different, behaving differently in different climatic conditions or soil type or different countries, you will not able to, the models are not able to give you a right output, right? So I think this scale is helping us to build solution at the to build the intelligence at the country level, and we have been demonstrated that in more than 13 countries on 32 different commodities today. We computed around 0.2 billion hectare of intelligence for our customers till date.
All right. And till date, 0.2 billion hectares. What are the scale-up plans going forward, and how fast will they come?
So we are expecting to have a representation of 5% of the global ground-up data on our platform, which gives us ability to predict every farm on the planet. If, every inch will be covered, and that can happen in next 3 years. Okay. Right. So it's not very far. We are today computing Nigeria, Bangladesh, India, in LATAM at the country scale. We are not talking about a district or a province, right? And making sense for our customers, solving for deforestation use case or climate change use cases or carbon use cases or supply chain traceability or intelligence on the crop like yield or pest and disease. We can tell you right now that this is a coffee farm, and next 15 days there's a block pod disease can happen, and then this is how you treat it, and you can do it in advance, and imagine the impact the farmer can have.
And 3 years, of course, is an ambitious target, no doubt. How is this partnership with AWS helping you actually go about scaling up and getting to the numbers that you want to get to?
We have a deep partnership with AWS. We are doing petabytes of compute on their infrastructure using their workloads. We are using a lot of Lego blocks like Lambda functions and Aurora, Redshift, SageMakers. Our Cropin lab is using extensively to build this model and scale out. Today, we service 92 countries. We have 30 million acres of land digitized, and we have to scale out this solution. It's all possible because of we are on the cloud, AWS cloud, right? And computing at the country scale and refreshing it, let's say building a capability to refresh it within 2 days or 3 days or a week's time, we are able to do that with this scale out solutions.
Right. Let's come to your revenues. You've grown at a rate of 2.5x, I think, in the last couple of years with an ARR of between 15 to 25 million. That's the number that I read. What are your projections in terms of your outlook? Where do you hope to go from here on the revenue front?
So I think we are good on the target which we have. We should able to meet our targeted number given to the to ourselves. And
what's the number?
So we will we are not going to tell you that number, but yeah, we should hit our 2x number this year. Yeah, so we are very positive about that.
So growth at 2x is what you're projecting and what you'll get to. Funding. 3 rounds are already over. I think between 33 to 34 million is what you've secured in the first 3 rounds, seed round included. I know that there's pre-series D funding in the running and that you are talking to 2 companies. Any insight on that and how it's been progressing so far?
So it's progressing. I think we almost closed that transaction. While you're speaking, we are also putting the signatures. But we expect to the Series D, and we are going live in Jan. And we are already talking to some of the investors. They already have interest. Yeah, and we'll see if we can close it within the next 6 months.
Right. Moving forward, the Series D round itself, I know that you've said $50 to $70 million is what you are targeting, and this includes the pre-Series D round also. Where will these funds be deployed once you hope to close out the round, if I'm not mistaken, in April or May, right? First half of 2023. Where will these funds be deployed?
So it's going to be deployed for our expansion plan. So we just opened our US office in Delaware, and we hired people in California. We are starting our operations in Europe. We are beefing up the team because we work with the large enterprises, and it requires a new capability to be built within the organization to service them. At the same time, we are investing in our Cropin AI lab and platform capability, because we are talking about petabytes of data compute and scale out those solutions at the country level, and that requires quite an investment, because these are expensive teams to run, expensive to run the computes, and that's where we partner with AWS as well to how do we bring down our cost, still scale out, and they have been very supportive of that as well.
And with that, it's a wrap of this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.